Hello friends, welcome to Rise IAS YouTube channel. My name is Tanmay Pal. Today's prelims bite session will discuss about Monetary Policy Committee. This topic will cover. See, in today's The Hindu newspaper, there is one article, MPC detained Repo Rate lower growth forecast. This article is there in the Business Watch page of The Hindu newspaper. And based on that, we have brought up today's topic. Now you can ask one question, very important question, that why we choose this particular topic for our prelims bite session. And for that you need to go through previous year question. This is 2017 previous year question. UPSC asked question on Monetary Policy Committee. Okay, I'm just zooming a little bit. Try to see the question. Which of the following statement is a correct regarding Monetary Policy Committee? Three statement is there, and now you have to find the right answer. Okay, so you understand that it is repeatedly in news, and also previously UPSC asked question on this particular topic. So this particular topic became very important for our upcoming prelims exam. We must have clarity over this topic. Now, how we will going to cover this topic? We'll keep it very concise and to the point for the prelims exam. We'll first understand context, then we'll understand genesis. After that, we'll see some organization structure of this particular committee and function of this particular committee, and primary mandate of this particular committee will also know. After that, which tool this particular committee use, we also see that. Okay, starting with the context. What is the context? See, recently Monetary Policy Committee meeting was held, and in that meeting, all the member of MPC unanimously decided to keep repo rate unchanged, and that is 5.25%. And also they say that their overall monetary policy stance is neutral stance. Okay, you understand the context, that repo rate is unchanged. Okay, and it is 5.25%. okay, now why they have choose this particular decision? And because of some macroeconomic headwind that is prevalent in the world. One is crude oil price is increasing due to West Asian crisis, and along with that, foreign capital outflow is happening repeatedly. Like we have come across various articles in the Hindu newspaper where we have seen that foreign capital outflow is going on, and because of that, rupee depreciation is also taking place. These are the all important factor based on which MPC decided not to change repo rate and keep it in 5.25% and with neutral stance. Okay, now that is the context we understand, but what we need to further understand, that is a genesis. See, this Monetary Policy Committee is primarily established to tackle the inflation, okay, to manage the inflation, and this particular committee was established based on the recommendation of Urjit Patel Committee recommendation. After this Urjit Patel Committee recommendation, there was a necessary amendment in RBI Act 1934, and this particular policy committee was created. Got it? Now you need to understand the organization structure of this particular committee. See, there is total 6 members in this committee, 3 from RBI and 3 from central government. And this three central government person has a fixed year term of 4 years, and they must be from some economic and banking background. Okay, and now coming to function, this committee has a mandate that it have to meet at least 4 times a year. Along with that, there is a specific quorum. Quorum means like minimum number of member required to properly function this committee. Okay, that is 4 member, at least 4 member required to proper functioning of this committee, that is quorum. And in case of casting vote within this particular committee, in case of voting tie, if in a particular favor, for example, let's take the example of this decision. If this decision, like 3 member goes against this decision and 3 member vote in support of this decision, then there is a tie, and to resolve those tie, RBI governor has that casting vote power, okay, to solve any deadlock, okay. And now coming to mandate, as I already said that it has a particular mandate that it want to contain, it want to control inflation, and there is a proper boundaries there within which RBI monetary policy committee need to keep the inflation, that is 4% plus minus 2%. This boundary they need to keep the inflation, and for that RBI use CPI, consumer price index, headline inflation as a benchmark indices. That what we understand, that 4 plus minus 2%, within this range RBI monetary policy have to keep its inflation, okay. And if this a monetary policy not able to meet this target for 3 consecutive quarter, then RBI have to submit a report to central government and have to explain why that particular limit breach, right? So that is the mandate this particular MPC monetary policy committee has. And at the end we need to understand some of the tools through which MPC control inflation and money supply in the overall economy. What are the tools? Number one tool is policy rate, repo rate, okay. And then SDF, standing deposit facility, and MSF, marginal standing facility. These are the rate through which RBI tackle inflation and use this as a tool. Now, if you don't have clarity over this tool, like what is repo rate, what is SDF, what is MSF, what is reverse repo rate, please let me know in the comment section. I will create a separate video where I will explain all these key terminology, okay. If you need, please let me know in the comment section. Now you have to solve this question. I'm just once again increasing the size of the screen. Please solve this question and let me know answer of this question in the comment section, okay. I think you have understood the topic, and if you have any doubt, please let me know in the comment section, okay. Thank you so much students for attending this particular discussion, and all the very best for your upcoming exam. Thank you.